following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, this first trading day of the new week. And what's the last day of May, right? And hope everyone had a great weekend. And of course, Memorial Day. Happened to be driving by the Arlington Cemetery yesterday, actually at this time. And yeah, so let's go straight to the market. And thanks to all our hosts, and thanks to Larry for joining in. This is a very special day here because the Dow is down 196. We have not seen a Dow down 196 session for quite some time, for quite a few weeks. It's trading at 18,033, making that 18,000 level really important. I would say that a close below it has to say that there might be an alternate count, but the alternate count has to favor the higher letter in the Chapman wave. The S&P's down now 21, was down early this morning, was actually down and came back to -3. So this is down 21. That's a deep retracement. At 2104, let me just, actually, this is the best thing I can do. So the E-mini is right now down 2250 with an alternate count of F/B at the high of 2134 round number high. That was on the 19th of May. There's an E in the letter on the weekly chart. And that suggests, because the MACD was holding quite nicely, but not great, and the stochastic still in the 80% area, it's in 89 actually, that there's still some internal strength there. So this 9-period exponential moving average right where we are, 2109 actually, 2101 is the 9-period exponential moving average, and we're at 2102. It's going to be very important. If you're looking at the arch formation that was just made, having smashed, I didn't expect us to smash through the 200-period exponential moving average just yet. I thought it would be later in the week that we did that. Well, we did. We're right through 2,111. That now is very strong resistance. So if we are looking at the arch formation, it says that by the 27th, we should be getting to the 2,085 level if this selling continues. It's about 150, 160 points lower down in the Dow. Most importantly, let me just move this away. Let me just close it a little bit. This is the right-hand corner, always has the 120-minute chart if I'm showing 4 at a time. This is the daily on the left and using the Chapman wave methodology. This is the weekly chart in the middle and the monthly chart on the right. Because the monthly chart, let's go to the S&P just to show you what I mean. The monthly chart is not complete because the futures contract, and I do not get futures going back all that long for the current month. You will see that last month was the exact time match in the S&P between the 2000 high, the October 2002 low, and the 2008 high. If you take the 2008 high and you go to the March 2009 low of 666, so you've gone from 1576, almost 1,000 points down to 666. And then you run up to the high of last month. That was an exact, to the month, time match, not a price match, but a time match. So now that we're looking at what's going on at this particular point, question in the den, is this the start of wave 4 down, that we Elliott wave 4 down? I'll get into that in a moment. I don't want to rush yet. We have seen a new high in the month of May. 2,134.72. So much for the song. Riding high in April, shot down in May. But that's not the point. The point here is that you've seen a bunch of candles not going very much higher over the past few months, quite a few months actually. And as a result, we are starting to see a handicap, a capping off of the upside. And that to me is really important. What I was expecting, that we would just see a nominal pullback today. Maybe worst case was a -50 in the Dow, -6 or so in the S&P. And they struggled to a moderate, just a nominal, moderately higher leg C in the Dow, and then pull back and then go to D later this week. And then we've got to be really careful. So we might not be doing that. We might, in fact, have the alternate count, even here on the S&P. This could be alternate count. Let me put it back. I had it there, and I thought, the stochastic's so strong in the 90s, 90% area, and the MACD was looking good, that I have to already go with a B/F rather than F/B. Well, it's back to the F/B. And one of the reasons why I have absolutely no choice but to be as critical as possible. Critique, that is I have to look at both sides of the coin as diligently as possible, is because if the stochastic starts to slide under 80%, that would take the price down to about the 2070s in the S&P cash. That would confirm that it's a peak E in the weekly, because it'll be very difficult for the market to later this week with a shortened week to break into the 2126s for a new all-time high. And then all of a sudden, we've got all our little ducks in a row. Let me tell you what I mean with the ducks in a row. Look at the Dow, INDU. Dow has an alternate count, F/B. I have to admit, the way it's looking right now, if we close anywhere here, I'm going to have to consider that really looks more like an F, even though the stochastic's at 83%. And that could very well be an E, because that's a failure pattern in the weekly chart if the entire week is very weak. So let me just give you the numbers. The Dow's down 196 at 18,036. It needs 18,150s, 120 points up from here to establish that it has a chance to retest the 18,186 9-period exponential moving average in the daily chart. A close by tomorrow underneath 18,000 would suggest be really careful. You have just too many of the alternate counts taking the worst case. And if that is the sense that I would get at the close of a week session today into tomorrow, and right here on the 120-minute chart, we've made a peak E in the 120-minute chart, and the Dow is sitting right on the 9-period exponential, the 200-period exponential moving average in this 120 chart. So this is a really important moment. Now, one of the things that I have to talk about is, let's just run this through because I really want to talk about bonds. The IWM has just got a failure pattern. It's made a peak F top in the weekly. This is one of the things why I've been saying limited upside. Actually, the two stocks that we have on the long side are still acting okay. In fact, they're up. So this is a bifurcated market, a real mixed market, and the TVX is the VIX index is up at 1442, and it's sort of struggling here, but it is up, and it's up quite sharply. It's up about, 14.42, up 2.28, up 18%. That's a big move in the percentages. Okay, so this is to me, you had your one foot in the brake, one foot in the accelerator. You better stick that foot right back over the brake again, because this is hazardous territory. Look at the QQQ series. Made it a little mini double top here. 111.16 was the last hour on the 27th of April. On Friday, it ran and went to 110.87. Couldn't break above. I thought it was most likely a peak B, but at this point, I have to say, could be a failure pattern, and the weekly chart has gone to an F/C. And the 120-minute chart went to that peak E. Those peak E's, look at this. EF, plop, it goes from 111.16 down to 106 round number low, runs up to this 110, what did I say, 80s, and then turns around. The little doji silent candle there. Very sharp pullback. Got to respect that. Have no choice. Now, if you look at the RTH, now this is really, we spent some time with it the other day. Down 58 cents at 75.73. Peak D in the weekly, and we were looking at it with one of our callers, and so he was in the put position. I said, I think you've established a nice entry point for the put position. Now let's see where it can go. Well, peak E in the 120-minute chart, peak D sideways rectangle movement in the 120 in the weekly chart, not dead yet, and the monthly chart is still looking absolutely fantastic if you're looking at the price. If you're looking at the MACD, very strong. If you're looking at the divergence between the stochastic at 91%, but starting to turn down, and the on-balance volume starting to turn down, you got to say, hey, be careful here. And let's go on. We want to go to the TLT. The TLT right now is very sharply higher. In fact, this is a powerful, one of the most powerful leg A from the bottom at 118.13 to the most recent price at 121.88. That's 8 points. I mean, over 8 points. That's a big move in a very short space of time. 120-minute chart making a nice cup formation here. Got to watch that because bonds are looking good. If bonds continue to look good, that could siphon money back from the stock market, migrating back into the fixed income area. So now let's continue. I want to look at gold, GC. Look at this. Where did it go to? Gold, GC. I said gold, GC. So let's just get it. Gold, there it is. So we've got gold right now. Having made a peak D, that's now a down arrow right there. Got upgraded from a sell signal to a sell mode. MACD did turn down, was looking quite good. Now it's turned down sharply in the stochastics at 48%. And there again, you've got your arch that goes into the lowercase h, lowercase m pattern, a repeated pattern, not that good. And the weekly chart says the 1197 area, 9-period moving average is going to be very strong resistance. And if you're looking at the support, it better hold that 180 to 168 area, because if it breaks under that, could retest the most recent low in the 111.40s. So that's gold. I want you to look at the dollar DXY. Look at this. Dollar screaming to the upside, leg B, very powerful move. So last week you had the dollar and the early part of last week you had the dollar and bonds moving down together. Now you've got the dollar and bonds moving up together. So if I look at the bonds, you've got a one-to-one. It's more than a one-to-one expansion to the downside, that lightning bolts, A to B equals C to D. But what's most important is that the monthly chart has started to improve. It didn't look like it earlier. It looked like it was going to hit the 92.64 area in the dollar index. But no, it reversed at the 93, what was it, 50, 93, 13 area. And it's now looking quite good. Month has got a couple of days to go. Let's see what happens over these days. But in the meantime, the level of resistance in the dollar is at 97.24. I would say 98.50 to 98.30 to 98.50 is going to be important resistance. But so far, it's a rocket ship to the upside, and it's making a Chapman wave squash formation. And that implies it should go to a C and then a D. And the other thing it says that the EUR-USD should have the inverse. Yep, and there it is. Peak D top, plummeting to the downside, making that pattern I call the Eiffel Tower, straight up, straight down, like a capital A. And look at the weekly chart in the euro-dollar currency pair, making that arch formation. Not good. Looks like it's at 1.089. It's going to test the 1.075 to 1.070 level. And as the break comes up, we want to look at high-grade copper. High-grade copper is, in fact, breaking down after peak C1, C2, C3, and it's a 2.78. I wouldn't be surprised if it's going to test the 2.75 to 2.72 level this week. Dow's down 206, S&P's down 22. We'll be right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. We're back, and we're looking at a couple of things here. My Dow Quartet. You know, I have this Quartet index that I made up. GE, look at GE. GE is holding pretty well in the sideways rectangular pattern, telling me that the market does have some support. And it did make a D, and that D says be careful here. And that's the tiniest peak A to peak B to peak C to peak D that we've had in General Electric. Let me just have a look here. And even that one over there wasn't as tiny as this. This has gone from 26.55 to 27.79, $1.25. And it's gone all the way to peak A, B, C, and then D. And that's just saying that General Electric does not have the strength, but it also isn't breaking down. And to me, that was a good sign. Weekly chart, that's something different. But in the meantime, the daily chart says, it's actually the weekly chart also has got the rectangle formation. And the monthly chart is above the wick of last week. That to me was all saying that General Electric is not as bad at this particular point as one would have expected. IBM, now it's breaking down, was holding in a sideways rectangle formation, still in the rectangle formation at 169.32. If it takes out 168 support, closes under 168, that's different altogether. That could have a one-to-one to the downside, having been repelled from the 9-period exponential. No, the 200-period exponential moving average in the weekly chart at 174.52. It went to 175. 176.30. trading now at 169.27. So it's showing weakness. If you look at Triple M, the third one in my Dow Quartet, made a peak C in the arch formation, failure pattern. If it breaks down this week and closes under 156, that's a very negative action. Right now, it's just in the sideways move, making a lowercase h. They can go to another M. And the monthly chart is in leg peak D. And that's the Triple M multinational 3M company. UTX, not as good as Triple M. It has had a rally, but it's in this rectangle formation, which also forms the arch, which also forms the lowercase h, which also forms the lowercase m formation. And it's got a G/A in the monthly chart, and it is holding the 9-period moving average of 114.66 as a low this month, trading at 116.86. Doesn't have much to go to the downside if it's going to break down in the monthly chart, because if it closes under 112, it's only 4 points away. If it closes under 112 in the next 2.5 weeks or so, that's going to be very poor. So that's the Dow Quartet at this particular point is struggling. They haven't broken down, but as an index is saying, be a little bit careful. If I look at the XMI index made a peak. Went to a G. No, it recycled. Oh man, that's difficult. It went to hey, I can't call that anything but an A to a B to a C, C minus. It's under the previous all-time high. That's why. The previous all-time high was at a peak G at 1920.30 back in August, the week of the 26th of August last year. So that means that it can fail underneath there. It would have been so unusual. And G/C in the monthly chart, but holding quite well so far this month. A question in the den about the VIX. I discussed it a moment ago. Let me do that again. Very sharp spike to the upside on a Monday. It happens to be Tuesday, but it's the first day of the week. And that says, watch this real closely, because if on Friday it's trading at 1432, that's good in terms of you're a bear. I contend that it's the weekly chart of the volatility index. It is the weekly chart that is going to be so important, because the breakdown last week, which went to it went to an F in the downside, says that between an F and a G, you should get some kind of a powerful move to the upside. But that if that starts to fail, you could very much go into the same sideways move that we saw during 2013 into the little bit of a breakout back in October of last year. So July, August, September, October of last year. But otherwise, it was trading in the 11s, 12s and 11s. And if you want to go back even further, you remember back in 2007? 2007, what happened in 2000? There it is. 2007, right here. There it is. Before you made that major top, you were traveling, you went all the way down to 9.39. So that's why it's very important. Now, the way I'm reading this, because what I call the residual strength that I was studying over the weekend, unfortunately, I didn't, for my subscribers, I didn't get to do as many charts as I usually do. I was certainly looking at charts and studying them at airports and all sorts of things. But I could not actually get to do as much work as I usually do. But I did a lot of reading of the charts. And I'll talk about that when I get back in a moment, because there is enough room here to have what I call a rogue wave to the upside. I'll be back. Basil Chapman, Tiger Technicians Hour.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So let me just continue to cover that thought. The reason why my belief was that there was a chance to have this, what I call a right arm extension or rogue wave, sudden move to the upside as the very final thing that says to the bears, has the bears just throwing up their arms and saying, I have had it. I'm never again going to short. This is just crazy. That's really the one kind of catch-all that I was expecting, that kind of expression of saying, don't fight the tape. In this case, the tape itself of the market, if there wasn't, in fact, another push to the upside. But when I look at so many charts, and that was my concern over the weekend, will there be enough energy just to go to that nominal new high? Can we stretch this out for the whole week, going into that nominal new high? Because a lot of the charts, I'm looking at Lamar Advertising. Maybe this is a brand new A in the monthly chart, but at this particular point, I'm going to call it an F just to be safe, meaning I would not be buying it. I don't know if I'd be shorting it right now, but it is a potential peak E with the fading technicals. Look at those fading technicals. That's the same technicals you see right there as you're beginning to see in the monthly charts of the Dow and the S&P. And what happens here is that there's a hint. It's like if you go to the 1929 chart of the Dow, you'll see that the what was it called? The new high, new lows chart had been making confirming the new highs for quite some time. In fact, it was a horrible smash to the downside in March of 1929. So my thinking here was that the monthly charts still have a while to go before they actually tank, and you can see how long it is. Look, from the time that the MACD in Lamar, LAMR, trading at 60.25 down 23, Lamar Advertising Company, Sarita Advertising Reach, with the stochastic pulling back, by the time it turned down, you went to that leg D, but you've had 1, 2, 3. This is the fourth month of holding very well so far, without breaking down and being almost at the all-time highs. So you understand how that works? If you see it in the monthly chart, there's no difference. It's just a longer period. So, okay. And what about IPG? Was it IPG? Yep, IPG, another advertising company that we were enamored with a long time ago, got out way too early. A, B, C, D, peak D in the weekly chart, pulling back under the 9 EMA. So I'm looking at the old school advertising that had come on really strong as having a little bit of a problem here. When I looked at the RTH, the retail sector, that says I'm probably correct when I said that we've probably been in some kind of a mini recession for quite a few months now, and it'll only be shown a little later on in the way that it's interpreted by economists. So let's look at the XLF. The XLF had a strong move to the upside, went to 25.06 just on the 19th. Now, 6 days, 1, 2, 3, 4. 4 days later, is testing the low. It's at 24.57, trading right now 24.66. Is this alternate count G/E? Is it going to fail to make that double top that I looked at earlier? It's already made the time price mismatch. Just missed it in time a couple of weeks ago on the week of the 18th of May by going to 25.06 instead of 25.07. No, that can't be right. 25.14. That was really the target. So he missed it by just a few cents, but still, he missed it. And it's struggling now. But look at the weekly chart. The weekly chart has gone to this leg right now, and it's still holding the 9-period moving average. So we've just started the new week. Can't really talk about a weekly chart. But look at the way the monthly chart is held. There's the MACD pulling back. There's the stochastic pulling back. You've had time and almost a retest of the old high, missed it by 8 cents or something, and yet look how the price managed to hold above the 9 EMA. Even though if I was just looking at the technicals of the monthly chart of the S&P Financial Spider Fund, I'd be saying, hey, what are we looking at here? Oops, we've got Mark and Ford Collins looking to also wanted to talk about the XLF. Mark, how are you?
Good. How are you? I was kind of timing. I was listening to you talk, and I'm like, well, that's what I want to talk about.
Oh, okay, good.
I was just. It's fairly rare that you just don't put a stop in for a position, and I was curious as based on today's action in the market, which I don't think you were expecting, if you'll change your mind on that.
It's a great question. So let me articulate my thinking once again.
Okay.
My thinking was that the financials would be an area that a little later this year would see an intense bout of buying. Right now they've done okay, but they really haven't led. And my thinking is that at some point, if this is a mega bull market, regardless of whether we have a sharp pullback or not, very sharp pullback we could even have, that at some point the financials need to get their act together and do very well. So as a result, we've started a small position, and we're holding the small position, and we just missed adding another one the other day, but I had a very tight entry point. We did not get it. So now we're stuck with one position, and the idea was to be buying it lower down at certain points, with rather wide points. I wanted to see, regardless of what my thinking was, I wanted to see, and especially with Thursday and Friday's action, there was a good chance that maybe the stock we have on the long side in the financials, which is holding very well, might not be the leader that at this particular point that I thought it would be, and that the financials independently would be pulling back. So yes, that's a really great question, because today is absolutely the day that I have to make a decision and say, Are you every other time, if talking to myself now, if you had stuck to your contention that what you were looking at, even the ones I had just a moment ago on the screen, Lamar and IPG is also an old school advertising company, did spectacularly, but we got in way back at the early stages, either took a tiny gain or tiny loss, and they didn't get back in, but the thinking was 100% correct. So I'm going to have to say, hey, mister, are you prepared to stick to your gun? Small position here, small position much lower on, and then a small lower down, and then another small position much lower down, and then you got to have a stop for the entire thing? Or you're going to chicken out once again, get out here with a tighter stop, and the next thing you know, XLF is trading at 26.70, and you're saying, oh, no, we have, you know what I mean? I will make that decision tonight or tomorrow. I'm not, as you know, I couldn't care less about taking small losses because we like to let the profits run. And if I'm correct in my assessment of XLF, then I have to be prepared to look at it as a rectangle in the monthly and the weekly chart. And if the worst case is to test 23, maybe break under it for a moment, then start an even bigger rectangle towards the 21.55. But if it can hold in the 23s over the next 3 to 4 weeks, I think that'll be really good action. I'll make that decision. So the answer to your questions, it's a good question because it puts me on the spot to articulate my thinking. So my thinking still is that the XLF could pull back. It's in a very nice situation here because most of the banks have pretty much done everything that they need to do. There's some other residual things that are going to be wanted by the politicians. But I would suspect, based on what I'm looking at here, that it's not going to be the banks at this particular point. The banks actually are going to be, when the real problem comes later on, maybe next year, whenever it is, the banks will suffer with us rather than be the leaders on the way down. And that it's going to come from other sectors, completely sectors that nobody even thought of, that would be the definitive weak link in the chain and be the straw that breaks the camel's back. There are a bunch of metaphors in there. So as it stands right now, you can see that the XLF, days young, is trying to come off the bottom. It's at 24.66 and the low is at 24.82. No, 24.66 and the low is at 24.18 was that? No, sorry, 24.57. So it's a little bit off the low, and I want to see where it closes because I don't want to be in a situation that says your thinking might be correct, and you might have all those entry points, even though they're small positions, because you want to accumulate for the longer term. But if you have a stop in at some point and that stop gets hit, it's a cumulative stop, and that could be a rather big percentage, which is what I don't like to have. So I might decide to have only 2 positions, or I might have just 1 position and say, let's for the moment widen the stop on that, because I don't want to be embarrassingly long on something that has the potential right here to be hitting very strong resistance in the low 25s. And if that's the case, you've got to be prepared to look at the low 24s as the next area of convenience for it to pull back to. So that's my thinking. And it's just how we actually trade it that's going to be the important thing over the next 2 days. But at this particular point, you can see that the XLF down 0.80% is down just a little less than the general market. I actually think on a weekly basis that it's holding up pretty well, but this is the first 2 hours of the trading week, so I don't want to get too carried away here. But that's my thinking, Mark, and I don't feel right now that I need to change it. Now, the only other thing I wanted to say is that theoretically, most people would contend with the fact that higher rates are really what's needed for the banks to really start to lock in and garner really big profits. But I think other things are happening with, like the airlines. I think the banks have gone a la carte, and almost everything they do, they're charging for. Most of us can look at our monthly statements and see that they're charging even just to walk in and wave to everybody there. So I think that the banks are doing a lot better, but the normal thinking would be higher rates are really good for the banks. So that would say that if later in the year we start to see higher rates, then that's when the banks. I don't know about that's an element that we have to actually see how the banks respond if rates go higher. After all, rates went higher up until about 5 days ago, 6 days ago, and there was a rally in the bank and the financials, but it's nothing. It's no big deal. The financials have gone higher before. I actually contend that the next phase is going to include the Schwabs and the Bank of America, Merrill Lynch part of it, where the public actually get back into the stock market and start trading a lot more. And that's what we should see. But that's just my thinking. We'll have to see if that actually works out. So the answer is, I'll make a decision over the next day or two whether to stick with the plan or just modify the plan slightly, at least for now.
Okay, thanks.
Okay, so now, in other words, I didn't really answer your question.
No, you said you'd adjust. You said you might adjust the stop tonight or make
exactly. That's the part of the question that you want the answer for. Yes. Okay. Thanks so much for calling. I appreciate it, Mark. So a question in the den: a broker index? Yes, there is a broker index. For the life of me, I just can't think of it right. XBL. Somebody, can you help me in the den? What's the broker index? XOB, X something, XOB, no, it's not XOB. A broker, IAI is, nope, I don't get IAA. I'll find it. And at some point, the broker index, I think, is going to be a really good index to follow. Right now, I'm not that sure. So let's do this. A couple of things I want to look at. I want to look at the SLX, which I've not looked at for a little while, Market Vectors Steel Index. Now, I think I've lost the notation here. I'm going to have to redo that. So there's peak A, B, C, D, E. Goes to peak E in the monthly chart, February of 2011, after making a spectacular top, weighed 114.12, pulls back to 19, was it 20 or 19? 20.19 in November of 2008, and then it goes peak A, B, C, D, pulls back, hits the 200-period moving average, and then just goes one peak higher in that pattern that we call, there's that the M formation in the MACD, M formation in the stochastic, and it fails and comes back down, retests the 34-ish area, 36.45-ish area, and now it's gone to another H that goes to an M pattern, lowercase h to lowercase m, and then it pulls back, and now testing the whole 30.60 area to the 36.5 area. That's going to be an area consolidation. So I'm really watching the Market Vector Steel Index very closely. Why did it run up as it did before? And one of the reasons is there were a couple of steel stocks that were still looking very good and acting very well. Peak A, B, C, D, E, and it goes to an E and turns down in the steel index. But if you look at X, U.S. Steel had a spectacular move to the 200-period moving average up in the 27s. It went from 21 to 27 back in April. Now it's pulled back sharply. It's at 24.50. If you look at AKS, what was the Schweiz, I think, steel? Look at that. It went above the 200-period moving average to peak in AK Steel. So they have done well, better, in fact, than the aluminums, because aluminum is based on something. Their market is something else, because they're doing great with the Ford, what's the 131 truck. And Alcoa is just, the chart is not that great. Whereas the steel stocks, of all things, the heavy-duty steel stocks have done well and are retracing. So I want to look at the XPD. Let me see. I had a couple of choices in the den. Yeah, there it is. Arca Securities. Let me write that down. I used to look at this all the time because the brokers were the thing, but now the financials are kind of spread out. So the XPD goes to a leg D, and it's probably going to be a peak D this month. Oh, wait a minute. Yeah, there it is. So it's A, B, C, D, E. No. I'll do this during the break. I don't want to just do it off the top of my head. So this is the Arca Securities broker dealer. We'll be back and look at that.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. And so Art Cashton saying, worst day of May for the Dow. Yep, it is. And in fact, we tried to rally down. We're down 185. S&P's down 19, down 20. And I'm going to be watching this real closely. I'll tell you why. I'm looking at the ARCA Securities Broker Index. Doji candle possibly in the monthly chart, F/B. Probably a peak F if there's no new high this month in the weekly. And the weekly at 191.99 down $1.92. Closes on Friday underneath 189 or 187, let's say. That'll be very negative. 187. Let's make it 189 to 188 support. And a possible alternate count. Exact trend line resistance got hit in the daily. Pulling back, the technicals are very weak. And you've got support here. Yep, there's that support. Right there. Right there. And that's at 191 on the daily. So we're going to watch this very closely. I know, this is just not the time to be overly brave. Small positions alongside, they work out. It's great. So just before I forget, because we're about to run out of time. Yes, there was noise in the background. It sounded like a jet plane. I'm not sure what the heck it was. Options Hour next. You've got your host, Kevin Hanks. Should be a great show. Options Hour with Think or Swim. Fabulous program. So please take a chance to use the opportunity to get to know your option strategies. It's really about strategies. So the IAI, I must have missed the dollar sign there. IAI. Yeah, no. IAI.x. Yeah, no. All right, so IAI. I've got, oh, there it is. The iShares. This is the, I love iShares. iShares US Broker Dealers ETF. Yeah, so look, it's the same sort of thing we've got here. So this is peak A, B, C, D, recycles, and that's E, F, G. Now it's A, B, C, D, and there it is. Second D. Let me show you. I'll do this live. All right, you've got the monthly chart. That can't be leg A because the bar that makes the low cannot be the high. You need to establish that there's actually a bottom in place. There is no bottom here. It's just another down move. You need to know that there's a higher low bar the following bar. That starts the leg. Now the first peak goes to A. Then it goes to a B. Then it goes to a C and a D. Then it recycles, go A, B, C, D. And if this low was lower than that low, it would have to start here, A, B, C. So this is a D. And it says, got to be a little bit careful. See how the candles are getting smaller and smaller, running out of upside energy. But at the same time, I haven't got the signal yet. I learned to say the stochastic's now at 82%, whereas before it was up in the 90s at peak D. Then it recycled, and the other highs were lower down. And the stochastic's way low. It's flattening out. So it means be a little careful there. Look at the weekly chart. The weekly chart says you can take this low right here. Let's see, we're about to run out of time. Yes, we're about to run out of time. I'm going to make this real simple. I'll finish this IAI chart up. We'll do it a little bit more tomorrow. AB, could have recycled. That's an F. It doesn't matter. C and a D. Either way, I get a D right here. So the weekly chart, the monthly chart are Ds. So you've got to be somewhat careful. And the daily chart at 43.39, down 34, IAI is a symbol. A close below 43 says, whoa, be very careful. A bounce back by Thursday afternoon, about 43.65, let's say 43.75. We'll say, whoops, save the day for May. Okay, so here we go. The Dow down 180. It's really a decisive close below 18,000 would be a big negative for this market. Somewhere in the 17,970s or lower, not good at all on any day. A retracement to the upside has to be called just that. It's a retracement to the upside, even if it makes a new high. It's very suspect here. But in the meantime, back at the ranch, the VIX index is ready to close. The VIX starts trading 15.60 or higher. Be very.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.